Since I have 2 months without posting a video about NIO, I decided to do a quick update of everything that has been happening with NIO since my last video. Hello guys, in today's video I will talk about that and we'll also compare NIO to Tesla when Tesla used to have kind of the same revenue and was selling the same number of vehicles than NIO today. Please smash that like button and subscribe since it really helps my channel out. Before starting with the video, if you haven't signed up with Webull yet, make sure to do so and claim your 2 free stocks after depositing $100, which you are able to withdraw when you receive your stocks. So it's basically free money. The link for that is in the description below. We have all seen how NIO was near bankruptcy last year and everyone was so negative about the company, but they just continue proving them wrong. After the huge deals they got, which I explained in my last 2 videos, they have been exponentially increasing quarter over quarter. So my last video was on July 16th. And what has happened since then? Well, obviously they have announced their monthly delivery updates, which has been impressive. In my opinion, despite the pandemic, NIO has been doing very well as a company and their stock performance as well. In the second quarter, they were able to deliver 10,331 vehicles, which is a huge growth year over year of 190%. Now, in August, they delivered 3,965 vehicles, which represents 104.1% increase year over year and has delivered 21,667 vehicles in total year to date. I do have to say that September is going to be a crucial month for NIO since they launched their new car EC6 in July, but the delivery for the model was supposed to start in September 2020. I do think that this month could get crazy for the stock mainly because September is crucial, as I said. If they report excellent delivery numbers for the new model, it could be a huge improvement for the company. Also take into consideration that the fourth quarter tends to be the best quarter for the industry, so I would expect even more growth between now and the end of the year, even with the pandemic. Later on August 20th, NIO announced the launch of Battery as a Service, which is a service that allows users to purchase electric vehicles and subscribe to the usage of battery pack separately. If users opt to purchase an ES8, ES6 or EC6 model and subscribe to use a 70 kilowatts battery pack under the BAAS model, they can enjoy the vehicle purchase price with a 70,000 RMB deduction, which according to Google, that is $10,335 less in the purchase price, but would have to pay a monthly subscription of around $145 per month for the battery pack. In other words, it basically allows you to buy the vehicle cheaper and save 10 grand of purchase price, but you have to lease a battery with a monthly fee of $145, which I do not know how beneficial that really is. At the end of the day, $10,000 divided by $145 is 69, meaning that if you lease the battery for 69 months, which is almost 6 years, you will be spending the $10,000 either way. Still, I do think a lot of people prefer to pay it on a monthly basis than to pay it all at once. I do think that this could help to boost the company and give them a kind of competitive differentiation from competitors. Then they announced an offering of 101.7 million American depository shares, which means that they diluted their shares and also included the exercise of full underwriters of their option to purchase up to an additional 13.2 million shares more for a price of $17. Obviously, we investors do not like to see companies diluting their shares since current shares are worth less. But it is normal to see this type of dilution in a growth and basically new company like NIO, even more in a company that is in the EV industry. This is a primary way to raise capital to fund expansion or innovation within the company. This time, they were going to use the net proceeds from the offering mainly to increase the share capital of and the company's ownership in NIO China, to repurchase equity interests held by certain minority shareholders of NIO China, and for research and development in autonomous driving technologies, global market development, and general corporate purposes. We all have seen how Tesla needed so much money to be able to innovate their product and their autonomous driving since it is such a new technology. All the research they have to do, the data that they have to collect, the trial and the error of the technology or service cost a huge amount of money. Also, they mentioned that it was going to help them with global expansion, which will help them grow hugely and be a more serious competitor to Tesla. I know that NIO does not have the same technology as Tesla and definitely is not as huge as Tesla, but still, it is a huge step for the company. I do not see it as a bad thing for NIO diluting their shares since they are going to make good use of the money. Another thing that has happened around NIO is that hedge funds have been increasing or adding NIO to their portfolios. For example, Bridgewater Associates, world's largest hedge fund, now owns NIO stock. Even though this article came out 4 days ago, the hedge fund actually started buying NIO stock in June. At the moment, they had a position worth $6.6 million, which obviously seemed as a huge position to us, but their fund is valued to about $6 billion, so it's not that huge of a position for them. Still, that position is now worth around $17 million since NIO stock is around $18 to $19 right now, which is a 157% gain for the hedge fund. The question is, why are hedge funds now noticing NIO? Well, I think it has to do with their balance sheet, which has improved a lot. As I said before, they were near bankruptcy last year, and this year they were able to manage excellent deals and started increasing deliveries as well, which has made the company exponentially grow even more quarter over quarter and year over year. Now let's do a comparison with Tesla. To start, I want to compare NIO to the Tesla of 2012-2013, which was the time that Tesla used to have the revenue NIO is currently reporting. As you can see, NIO has had a revenue of $1,381 million in the last 4 quarters, and Tesla reported a revenue of $1,323 million between the last 2 quarters of 2012 and the first 2 quarters of 2013. The thing is that Tesla used to have a valuation of around $3 to $13 billion during that time, while NIO has a valuation of $22.7 billion, even though we're comparing the company according to their revenue, which makes NIO an overvalued company. Now, obviously those are mathematical comparisons, but we have to take into consideration that at the moment, Tesla had just announced their Model S and only had the Tesla Roadster that came out in 2008. Right now, NIO has 3 models available. We also have to take into consideration that investors in 2012 did not see any bright future for the EV industry since it was such as a new and very innovative technology. Nowadays, there is a lot of hype in the industry and now investors do see huge potential for the electric vehicles. So to do another fair comparison, let's check today's numbers. Right now, Tesla has a valuation of $395.8 billion, while NIO $22.7 billion. So basically, Tesla is currently 17.4 times bigger than NIO. Still, Tesla's revenue in the last 4 quarters is 18 times bigger than NIO in the last 4 quarters as well, meaning that according to this comparison, NIO might be fairly valued within the EV industry right now in comparison to Tesla. Now, there is something very important. Remember that NIO is a Chinese company while Tesla is an American company, and have said before that a lot of investors do not trust Chinese companies, meaning that they will not invest in them only because they are from China, even if their product, service, or whatever they do is impressive. Obviously, this could slow down NIO's stock growth. That is something that I have seen with Alibaba and Tencent. When I post a video about any Chinese company, I tend to have comments saying that people do not trust Chinese companies, and even more after what happened with the Chinese company called Luckin Coffee, they inflated their sales. But the question here is, what do I think about NIO? First, as I have said before, their technology is impressive. Their constant exponential growth and innovation in the company is excellent, and do not expect any slowdown anytime soon. I do think that a pullback is necessary to be able to continue with a healthy growth in the stock. I do not recommend any short-term play with this stock, well, actually with any stock, but still, this is a high-risk, high-reward stock that still has a lot of room to grow. Analysts are forecasting that the stock price for NIO could get as high as $170 per share within the next 12 months. But to be honest, I would not rely on what analysts say or what anyone says. I would like you guys to do your due diligence before investing in this stock, because all of this bullishness around NIO could easily change if they report a bad quarter. It has happened before, it happened with Tesla and other growth stocks. That is how analysts on the stock market function, and that is why I do not rely on what other people say, and also why I do not like to invest in the short term. Still, I do think that they have a very, very good potential as a company, and even more with their current plan of global expansion, which could be huge for the company. I would like to know, what are your thoughts on NIO? Did you invest? Do you want to invest? Please let me know in the comment section below. Also remember, I have a complete free Discord group chat, which the link for that is down in the description below if you want to join. Hope you enjoyed the video. Please smash that like button and subscribe, since it really helps my channel out. Thank you, and see you next time.